Hello friends, welcome to my channel. Today we'll talk about how to build investment portfolios. You should have very clear focused goals. If your goals are very clear, then it is much easier to create investment portfolios. Let's see what it actually means. So what do you mean uh, by investment portfolio? So let's see. An investor may have investments in various asset classes. He may have liquid cash. He may keep a liquid cash with him. He may also invest in gold, and he may also have something like let's say some deposits, fixed deposits, recurring deposits, provident funds. These are all savings, you can say. And then he may also invest into shares and bonds, which are also instruments to create wealth over long term. So these, along with this, one may also have investments in, let's say, residential estate, real estate, commercial real estate properties, plots. So all of that. So this all together is what it means. We call it as an investment portfolio. It's a group, basically, is what it means. Now, what happens is you need to know the risk appetite. So if you don't have the risk appetite, it is very difficult to handle volatility. So markets will keep on going up and down, and unless you know your risk appetite, it is difficult to handle the volatility. So you should know your appetite and accordingly invest in different instruments. Now, first of all, you should create a financial goal. What is your goal? Why you want to invest? It should be very clear. And then once you have identified your financial goals, then try to identify what are the investments which you should make, which can give you that kind of a return, so that you can achieve your objectives. So then identify investment, whether you want to go for equity investments or debt investments. So these are two broad instruments. Debt, which means your fixed deposits, recurring deposits, non-convertible debentures, and then you have equity, which is your stocks, your mutual funds, all of that. And then once you have identified, then you can plan to stick to that and then invest into that for a longer term, so that you can meet your financial goals over a period of time. Okay, so that is what the approach should be. Now, coming to the short term investment, so that's where the problem lies. The markets are up and down. They keep on going up and down, and this is not suited. This asset class is not suited for short term making money into that. So you should know your risk appetite very well, and then do a allocation accordingly. So when you invest money, you should invest for a longer term when it comes to equity investments. Okay, and then asset allocation is very important when it comes to stock, mutual funds, all kind of investment portfolio. And then you should be you just stick to that. Once you have defined your duration, you define what investments you want to make, so that you can finally achieve your objectives. Now, portfolio can be aggressive, conservative, and hybrid. It depends on whether you are tilted towards equity, debt, or a mix of both. Once you know the risk versus reward, it becomes easy to invest in various investment options which are available. Okay, and then I have here mentioned sample of how the these markets going in a cycle. Like sometimes it will go up, sometimes it will go down. And once you know this very nature of the stock market, then it will be easy to you know handle that kind of volatility. And then you should have your allocation properly done. There should be a balance between different asset classes in your investment portfolio. So let's say you have multiple options. So you should general as a general guideline for, let's say, for a conservative portfolio, this is what I have mentioned in the screen. This is just a guideline. You can tweak around with that. It's just a guideline, not a recommendation, but it works very well. So once you have defined, just try to rebalance it after each year. See where it goes, whether you're getting the returns or not, and then rebalance it. If something has gone up and something has gone down, just rebalance it. and then so that the percentages remains intact once in a year at least. Don't leave it for a very long time without knowing about it. I think that is how the approach should be. And I wish you all the best for investing. Thanks for watching. And you know do like, if you like the video, do mention that, and share with your friends so that they are also aware. This is a basic is what I try to cover, not a very detailed one. And do subscribe to the channel so that if future I create more detailed videos, you will be able to get a notification. Thank you.